Welcome back. We have Leanna Haakins in the house. We're going to talk Haakins.
Yeah.
Haakins. I can get it, but she's
My
Hawk
nickname is
Financial.
the Hawk, so
The Hawk.
Yeah.
The Hawk. See, I'm intuitive. What can you say? You know.
It represents freedom.
That's what
Right?
the boys in the business call me.
So we want to discuss, Wealth Wednesday. We want to discuss when to take risk and when you should save your money, because you're an author, you're a founder of financial, young entrepreneurs, financially free. I love that.
It all starts somewhere, and it's so interesting because some people already have a successful financial portfolio, and so for somebody like me who's still trying to figure it out as an adult, I don't even know where to begin. You say risk, I'm like, ooh, it was a risk to buy those shoes, but I'm already carrying so much debt, I don't even know what I would risk in an investment.
Mm-hmm. And so, I think it's really interesting because there's a lot of myths with investing and finance, and one of the biggest myths is that investing is too risky. And that's the biggest myth of all.
Exactly, because I don't want to lose that little bit.
Non-investing is the biggest risk, right?
Right.
So I think that that's sort of something that a lot of people need to sort of wrap their head around. And, it's not surprising that you say that, because most people in their 20s, 30s, 40s, don't have a financial portfolio together yet. They don't have it planned out. And that's okay, because, you're at that age, your money is sort of all over the place. You don't necessarily have a family yet. You're not married or have kids. So maybe you haven't gone through those transitions where you need to combine your assets and start planning things out for your future and your children's education. And when you go through those big life changes is usually when you start thinking like, okay, well, maybe we should sit down with a financial advisor. And when you go through those changes again is when people usually start to think like, okay, well, maybe we should sit down with someone. It's a really big thing that Tony Robbins talks about, actually. So everyone's heard about Tony Robbins, and he's written a couple very popular financial books as well. Money Master the Game and Unshakable is his new one, which is very similar actually to the book that I wrote on a higher level. Mine is sort of an entry level version of the book Unshakable, which I've read and listened to on Audible recently. And so I talk about compounding interest and compounding your investments from a young age, and it's crazy what the difference of 5 years or 10 years makes if you start investing young. So absolutely, that's the number one thing, is start doing it small and as often as possible.
But where do people even begin for that? Because when people say investment to me, I'm like, I don't know. I don't have a financial advisor to call. I don't know how to buy a stock. I don't even know where you would go to buy a stock.
Just call Leanna.
No, but really, where do we even start?
Yeah, and really that's why I wrote this book, because growing up in my 20s and I worked in the business, and my girlfriends and my buddies would ask me all the time. They're like, okay, well, luckily we have a friend like you that we can ask, but most people don't have a friend like that. So, buying stocks, individual stocks, is absolutely not something I would suggest. So really good question. So there's a product that's become really popular in the last, 5 or 10 years called ETFs, and these are exchange traded funds. So what it is really is a basket of securities, which are stocks. And so these are equities or parts of big companies, big American companies or international companies, that you can buy a piece of these funds, and they're really low cost funds, and they don't have a lot of expense or trading costs to them. And what you can do is you can open up an account yourself, which is called a discount trading account.
I love a discount.
Yes, exactly. So it's usually a free account, and you've probably heard of these companies like Charles Schwab or
Merrill Lynch.
Vanguard, Merrill Lynch. Yeah, they have all of these kind of different accounts you can get. So Google discount brokerage account, open up an account online, and you can buy these ETFs. You can do a little bit of research and find one that tracks an index like the S&P 500. So essentially, you're buying this ETF, this exchange traded fund, that's really just tracking the American economy. So if you're going to buy something like this, you're really just buying it because you believe that in 10, 20, 30, 40 years, you're thinking very long term, that the American economy is generally going to prosper and do well.
Because I don't invest in the stock market. I remember I put $10,000 in when I was like in my 20s, and I lost it all like that year. And I was like, okay, I'm going to stick with real estate.
Yeah.
And now I invest in green tech, which is a totally different industry. But how can somebody, if they're looking for a financial advisor, how can they go? Do they get your references? How do they investigate to know who they're working with?
Well, what's really difficult, I mean, why I always recommend these exchange traded funds that cover these indexes or different markets like the American economy, with the S&P 500 or these different big indexes, or like emerging markets, and you can buy these funds, which are a basket of securities, versus maybe something like going right into real estate, is because real estate, you need to know a lot to invest in real estate versus just investing in the American economy. For
Well, you can
10,
invest in
20,
REITs or
30
invest in
years.
people that are investing for you
Yep.
and they don't have to necessarily understand the market.
Yeah.
They have to understand who they're investing with.
But the problem is when you do go to a financial advisor, you are going to be paying a much higher rate to have their advice. So again, through mutual funds as well, you are going to be having a much higher expense ratio to be able to use their expertise. And again, that might be very well worth it. But for most millennial investors and people in their 20s and 30s, you might not necessarily have a high enough net worth or enough money in your account yet to be really, I don't manage people's money at all. So my company, Blackhawk Financial, we specialize in marketing services for financial services companies. But what you can do is if you have saved up a significant amount of money and you say, you know what, I have $50,000 of cash, or I have $10,000 of cash, and I just, I don't want to invest in myself. I don't feel comfortable. What you can do is you can go online, and I wouldn't even suggest getting someone straight up offline. I would ask your parents first. I would ask your aunts and uncles and get a personal referral, because it's really hard to get a financial advisor without having a personal referral. And then there's also a great website called Broker Check. So you want to make sure that any financial advisor you're using hasn't had some sort of mark on their record or a complaint about them. And Broker Check is run by FINRA, which is the national authority that regulates financial
Thanks so
advisors.
I would invest in your book.
Well, yeah, I mean, this is a 5-hour read too, and it gives you the basics on everything.
Yes, I will be young, fun, and financially free, living my best life now and planning for a very kick-ass future.
Yeah, you can do that as well. I mean, that's the thing is, you really do have to invest the time in yourself, because you have to know the basics yourself too, I think, before you give your money to somebody else, because they all specialize in different areas too. So again, most financial advisors, they're going to say, oh, never put your money in Bitcoin or cryptocurrency. But if you're a young millennial investor, you might want to say, you know what, I'm going to keep $1,000 aside, and I want to put a little bit of money into AI or into robotics or into a little, an ETF or a fund like that tracks some of those trend following things. And, I want to put it into a REIT. And your financial advisor might not agree with some of those trends that younger people are looking at.
Well, thank you very much for giving us a guidebook, walking us through risky investments, and making me feel like maybe I could go get that basket.
Yeah.
At a discount.
Well, there's a lot of different funds that track a whole bunch of the fun stuff like that. So, have fun with your investing. And, there's a lot of stuff that tracks the luxury fashion goods too. And
So cool to see a woman in that field, though.
Yeah, absolutely.
Congratulations.
It's worth
Yeah.
taking the risk. Stay tuned. We'll be back with more on Good Morning, LaLa.